Ingo Beyer from Morgenstern, who some of you know is our chairman. I haven't seen Ingo myself for about 3 years because of the pandemic. And, it's been super interesting to again meet him and sort of catch up on the things that he knows best. And for you guys to get to know Ingo. And without further ado, let me introduce Ingo Beyer from Morgenstern. Please, a round of applause to our chairman. Without Ingo, this project wouldn't have happened. But I think it would be interesting if Ingo started with telling us his journey and about himself first before moving into China. Thank you very much for joining us tonight.
Well, thank you, Svetlana. And I know Svetlana is always putting the bar very high up. And I was thinking this time, what is she doing to put the bar so high up? And then now I figured out I'm following Joshua because I understand he's one of the best teachers. And I know that's so the bar I have to take. Who has been in China, mainland China? Please stand up. Please stand up. Guys have been sitting so long. Mainland China, who has been in mainland China in the kind of, not in the major cities, not in Shanghai, but outside the major cities in his life? The rest, please sit down. So how many do we have left? Are you standing? One? No, he's not standing, he's looking for. Are you, yes or no? One, two. Now I'm not asking the question who speaks Chinese anymore, I think. If not, sit down, but you both speak, right? No? Yes? No. And this is the interesting thing. Here we have a country of 1.4 billion people. Here you have the country that soon will be the largest economy in the world. And in this esteemed international group of, I would guess, 18 nationalities in the room, nobody speaks Chinese. And a few people have really experienced the country outside the major cities, Guangzhou, Shenzhen, not to talking about Beijing and Shanghai. My name is Ingo Beyer from Morgenstern. I was 30 years with McKinsey, 20 years in Munich, and 10 years in Shanghai. But don't test my Chinese. You should test the Chinese of my kids, because 2 of them were born while we were in Shanghai, and they went to the Chinese kindergarten and primary schools. And they indeed, at least one, Sophia, is fluent speaking, writing, and reading in Chinese, which I'm very jealous of. So my China didn't make it further than the taxi driver direction and food manual. McKinsey was a great time in China. We were serving primarily Chinese companies, state-owned enterprise, the government, working a little bit on small parts of the 5-year plan. And it was a little bit of time in the in the engine room of China, serving a Chinese company, serving the chairman, all the different calculation system, the economics. Eric would, he would lose his last hairs if he would see how these companies do their economics and how many economics. If you say, can you show me the balance sheet? The first question is which one? And then it was a fascinating time. So when I, after 30 years, decided to retire at McKinsey, we put up a Chinese fund for Europeans. It's not easy. It's impossible for you guys in Europe to buy Chinese equity. You can buy Chinese equity through Hong Kong. You can buy Chinese equity through the NASDAQ, but not through, there are 3 cities now with stock exchange, the Shenzhen, Beijing, and Shanghai. Yes, of course. Shanghai, you have 2 stock exchange, Shanghai, 1 in Beijing and 2 in Shenzhen, but you cannot buy directly from Europe because you have to be an institutional investor, you have to have a fund or so, there is a tool called Hong Kong Stock Connect that you can buy. So we said, let's create an opportunity for Europeans to invest in Chinese equities. So we put up a fund and we found a big asset manager, Akatis in Frankfurt, who have almost 15 billion euro under management. So this was a great experience. And then my dear Svetlana came to me and said, Ingo, we need to create a university. That was still at my McKinsey time. And you know, a university to found is not what you do every day. So I said, I don't know, what have you smoked last night coming up with an idea of this? And I cannot tell you how proud I am and how impressed I am that we have such a group. We were calculating in autumn, we will have 350 alumni already of Harbour.Space, despite COVID. And I'm very impressed, and I'm very jealous. I'm very envy that if I would be at your age, I would definitely join Harbour.Space but we had never had the opportunity. So let me not talk about Harbour.Space because it's you who know Harbour.Space much better than me. But let me talk a little bit about China, because apparently, as we figured out, there's only a fraction of you guys being sort of deeply rooted in China. They did a shutdown. The economy continued to grow and completely outperformed. And there was a time, at that time we said, in 2030, China will be bigger than, not purchasing power parity adjusted, but will be bigger than the US due to this dramatic difference between the US growth and China growth. China closed the gap to the US that they will be, from today's perspective, the largest economic nation in 2028. So that was the first thing. And President Xi always announced that he basically was the only person in the world who really dealt with COVID properly. The second wave now happened a few months ago when we had the few outbursts in Shanghai. And then he's in a different situation. This COVID is not that dangerous anymore, but B, the population is not vaccinated. The people over 60 have a vaccination rate of only 30%. That means, and they have lung issues because the air is terrible in Shanghai, as we all know, and the pollution is terrible. And then you know, pollution and lung and COVID is not a good triangle that you want to be in. He wants to get re-elected in autumn. Therefore, he says, let's bridge the time until autumn by all means. And then I get re-elected and then I declare COVID being over. That's my hypothesis. My hypothesis even was that he said he will pull his election a little bit forward. But I don't know if this might happen. The other point is people are saying there are now 2 vaccinations in the pipeline. The one is an RNA pipeline. The other is oh, that's very different. Yeah. So this one, the right one? Yeah. So that is to put in perspective. The cases are very low, though the measures are drastic. Just before we go, this one story, just to give you a limp of what's happening. A friend of mine was sitting in a bus in Shanghai. His phone was ringing, and there was the Ministry of Health. And there was a person at the phone and said, can you please pass on your phone to the neighbor to your right? I said, yes. He passed the phone to the neighbor of the right, and then the person put, Wei ni hao. And then the ministry said, listen, your phone is off for the last 3 days. You were exposed to a COVID positive person. Get immediately out of bus. You have to keep your phone on, go to the next testing station and do your test immediately. That's the level of supervision today in China. Yeah, that is reality with what we have to live with a significant part of the world's population. And the people are not unhappy. That's the interesting thing. The people means the vast majorities. I'm teaching at Tsinghua University, which is one of the 2 best universities in Shanghai. It's a technical science university in Beijing. And I always ask my students, what do you do with this supervision? How do you deal? And they said, you know, what's wrong with it? We all want to have a better society, better community, and it helps in many aspects. So the level of concern that we would have does not exist about, even in the young generation. So that was my story with the bus. A big step back. How do Chinese people feel and sense? And if you talk about China, it is very important to understand this. And that is a chart. That is the world's evolution in 2000 years, GDP 100% world's GDP, and the timeline, but I don't know if you can see it, but the timeline is very distorted. You see at about 70% or 60%, half is the first industrial revolution. This is year 1, 1820, and this is 2017, so roughly today. What you see is until the first industrial revolution, China and India made up for 2/3 of the world's GDP. China, 1/3. And if you are for 1850 out of 2000 years, 1/3 of the world, how do you think? You think about being yourself as 1/3 of the world. There was a time where Europe barely exists. The US did not exist, GDP wise. And then you had the first industrial revolution. That means the steam engine appeared, and with the steam engine, Europe came up. And all these small lines are the European countries. China did not participate in the first industrial revolution, right? They didn't. Then you had the second industrial revolution. There was electricity in 1910, 1920, and then America really came up. You were able to have dislocated production facilities all over America. You could run productions with electricity. And that was basically the major boost of the United States, also Europe. The third industrial revolution came with the digitalization. And that was a time when Europe passed out and let it passing by the trends, but China jumped on the wagon. And you see, that was the time when China really came up and really started to grow, and that fell in place with the opening, with the transition from Mao to Deng Xiaoping. The fourth revolution maybe is the artificial intelligence, and that will happen. That will be a game between the US and China, or China and the US. I don't know. The jury will show the order. But unfortunately, Europe will not in a big way participate in this, at least so far, because we are not putting our strength together. So you see, the world evolution correlates with revolutions, with industrial revolutions. And you see that China is now on the way back to become 1/3 of the world, where they had been for 90%. I worked between 25 and 2017, but I'm still working in China. I have an office in Shanghai, a research office, and I'm teaching at Tsinghua University. So leaving out the COVID time, I'm there 6 weeks a year. So not that intensive anymore, of course, but.
All right. And could you tell maybe to the audience more about One Belt Initiative?
I will come to this, exactly. It's a very important topic because it's China's land grabbing. Was this the next chart? So what you see there over the last, whatever it is 30 years, that China now has this explosion due to the digital discontinuity, and it jumped up from place 9 in 1990, year 2000, place 6, place 2, and this is not purchasing power parity. Purchasing power parity adjusted. If you adjust it by purchasing power, China is already for a couple of years the #1 in the world, right? The people are mixing this up. The US are still sizable bigger, but in 2030, the latest, I think it will happen a bit earlier, China will become the next one. Next chart. Will become the largest company. What happened, this is also interesting. The cycles are shrinking. 40, 50 years ago, to grow a company from a kind of startup or young phase to the world market leader, it took 40, 50 years, maybe even longer if you go more years ago and look at the Siemens. It took Siemens, I don't know, 100 years or so. The Korean cut it down to 30 years. The first Chinese companies, those were the Huawei's, the Sany's, the Haiers of the world, took 20 years. The Indian also 20 years. But today's generation, second generation, the Tencent, the Alibabas, the Baidu's take about 10 years from creating the company to global market leadership. So at least Fortune 500. technology, software, IT is of course the major driver. So what did China do, the Chinese companies, to really change the game? And there are two big steps. This is the first steps I'm describing. In every single sector, what happened, there were Chinese companies at the low end, poor quality, low end, and the international companies were present in the country with a high technology, high tech products that were designed for Europe or the US. The Chinese companies started to copy. That's where they earned their image as the best copy machine in the world. I was serving Siemens, and they had then the room where they manufactured the powertrains for the trains. And we saw on the camera every night there were lots of Chinese people crawling into the room and measuring and taking photos. They copied everything. They copied the McKinsey report. They copied the BMW sign. There was nothing they didn't copy. But they didn't copy to copy, but they didn't copy because they said the products that the Western companies are serving are over-engineered for our market and too expensive. And they translated this knowledge into a product at a 50% lower price point and at a much better design to market. I'll give you an example. A earth excavation machine, a bagger, you say in Germany, whatever, earth, I think is a translation. What the Chinese people, they don't need necessarily air conditioning, but they need a filter for the polluted air. They need a filter for the polluted diesel. And they need the arm needs to be much stronger because they're breaking big stones. And if you try this with an Atlas Copco, the machine is basically broken. So it's a better design for their need at half of the price. And none of the companies, none of the Western and North American companies occupy this segment. This segment was booming. They didn't occupy it because the low end and the high end still was growing at 10, 12%, but this mid-range was growing at 30, 40%. Everybody as headquarters was happy because their company grew at 12%. They were very profitable, but then they didn't realize that they gave up the market over time. And today, the role of the international companies in China is almost negligible, I have to say. And it will have the BMWs and the SAPs of the world and the GE need to reformulate their China strategy because they will be most likely out pretty soon. Can we put the next chart? Okay, this is then I can also. But what also happened in the time was a massive sort of restructuring of the population. They created a lot of wealth in this time. The one point, I don't know if the chart is coming, I forgot when I put it together, but they really created a middle class. Today you have about already 70%, 60, 70% of Chinese people are living in a middle class, which didn't exist 10 years ago. Middle class defined as 18 to 34,000 US$ family income a year. And you see the Gini factor, this is the factor of rich people to non-rich people, basically increased substantially, not to the US level, but had a quite substantial increase. It's better if you, this is the middle class. Isn't that an amazing picture? You see the share of urban households in the mass middle class and upper middle class. And here you see from 2002 to 2022 that the upper middle class, and this is 16,000 to 34,000, so I was almost right with the numbers, grew in these 10 years from 14% to 54%. And if you add the mass middle class to it, it is a significant part of the population who's not living in poverty and who really has a decent outcome. I like to give the story of, I had a driver in China, and when he started with 300, I translated from RMB to US dollar, 300 US$ in the beginning. 8 years later, this man earned 1,000 US$ at a much unfavorable exchange rate for us. Plus, he had bought 2 apartments in Shanghai, and 2 years ago, he visited us in Germany with his wife and his one son. These people are very happy. Let's keep in mind, what is their value system? You know, they have a value system that says the community, the society is on top and the individual is lower. So the individual looks at the society, and over the society, of course, is the political party, and over the political party is the president, because these people position themselves to steer the society. And they're basically saying, what are the values? The first value is family. So nobody in the world is more family driven than Chinese people, but closest family, and money. And there are no other values. Money and family are the two real values that they count. You know, and the family is intact. And if they earn more money, and for the last 25 years, they had on average 12% more money in their pockets every single year, they're super happy. Question is, how long does it last? But still, that was really driving the middle class. But what also had happened is a huge, basically conquering the world. That's the distribution of trade with the US and China. And you see that the picture turned red. In the year 2000, the world's trade was dominated by the US products. And within 20 years, the picture turned from blue to red, that China is really dominating the world's trade. And the China, sort of the trade difference, import-export, is still increasing more to the favor of China. You can say today, every third product or every third module in the world is coming from China. Every third product or module is coming from China today. So that we say decoupling the world and localizing logistics chains, yes, will happen, but it takes time. Every kitchen product, electrical kitchen product today is coming basically out of China. I think 98% of the microwaves are coming from China today. But let's not forget Asia. China is the driver, but here what you see, the share of global GDP purchasing power parity adjusted of the US is going down on the straight line, right? Let's not forget, for a long time, the kind of the slope that the US is experiencing, the economic slope, is happening for the last 20, 30 years in the US. We are not talking, we are not realizing it, because it's a minor gradual change that people don't realize. If the temperature goes up by 0.1% over 15 years, you don't realize. If you have a temperature jump, human beings are reacting to discontinuities, to jumps. This is a sliding. But Asia, you see from 30+% today over 50%. But meaning today, already for a few years, GDP purchasing power adjusted, Asia is already the largest region larger than the rest of the world. So we are definitely at the beginning of the Asian centuries. So if you guys really want to understand the world, you have to spend time in Asia. That's why we opened the Bangkok, right? Hub. It was not the reason, but please start to understand Asia. Asia is bigger than the rest of the world, and if you calculate this without purchasing power parity adjustment, it has the same land, it's just a little bit moving. And don't ignore that the economic influence of the US is going down constantly. Yeah, despite all this amazing success of China, the last year, China's sort of stock market has done some significant adjustments, not only the Chinese market, but also the US market. Here you see, I don't know, it's not super recent, but it's still until April. That's what the KGV means, the earnings per share. That means the Kursgewinnverhältnis is so ratio, price earning ratio. Price earning ratio of the Nasdaq collapsed from over 80 to 20. I mean, that's happened in the stock market, right, recently, but also the CSI 300, these are the 300 largest companies in China. On this scale, you don't see it really, but it's from 18 to 12, which is also a third down. It's just the scale that diminishes the kind of the importance. But you also see that the valuation of the Chinese stock is even today, after the almost collapse of the Nasdaq, price earning ratio is roughly half of the US. This is partially correct, but partially just in a very, very aggressive undervaluation in China. Next chart. And this downturn, even of Chinese stock by let's say 35%, had nothing to do with the economy. Almost nothing. Look at those numbers, and I think those numbers are stunning. The left side, the upper lines, is the first half year 2020 to 2021. And what you see that, and these are all Chinese A shares. So A shares are all stock listed companies in mainland China. So the three stock exchange, Beijing, Shanghai, Shenzhen, are all A shares. N shares are the stocks in New York, and H shares are the stocks in Hong Kong. So all mainland China A shares, all companies, basically all Chinese companies listed in mainland China, grew on average by 33%, and the profit in this time, this is Corona time, right, grew by 61%. This is amazing, right? This is so stunning that the whole kind of basket of all companies said. Then you say, okay, but there was a second wave of Corona, that is first quarter 2021 to first quarter 2022. The growth still in China of all companies, 14%, and profit still up 11%. That means, and that's what we see on the next chart, there is a decoupling between the real economy, which is the red line. This is the China GDP and RMB. And these are month or quarters, and I put a red line as a sort of correlating line. And this is the real economy. And the lower line, the blue line, is the stock market, the valuation of the company. So there is a divergence, a decoupling happening for the last 1 to 1.5 years, where the valuations of the company sort of broke down by 35%, but the performance of the company, the performance of the country continued to go up. So a complete decoupling. That happens in the world, this decoupling, but it never lasts for long. So this will be kind of, Chinese equity will come back, I guess this year. It depends a little bit on the election, but look at the very low, Hong Kong's evaluation are below book value today. That won't last forever.
Is it a trust issue, or why people don't invest in these companies? Because these companies probably, as you said, they're performing really well. So somehow somebody is not putting them where they actually are. So like they're not traded for the worth they.
That's right. So to answer the question, you have to look at the investors in Chinese stock, right? You barely have foreign investors because of this difficulty stock exchange that we all cannot invest. The Americans also can invest. You only can invest through Hong Kong Stock Connect and funds. That means over 90, much more than 90% are local, sort of Chinese people in mainland China, not foreigners. So this downturn is driven by foreign investors, meaning investors in New York and in Hong Kong, but they only have a leverage of 7 or 8%. There's also coming some pressure from mainland Chinese people. Secondly, the Chinese equity market is a retail market. 70–80% of the trading is done by retail. Mom and pops and taxi drivers and AIs are trading, and these are very emotional traders, right? They're not like the Citibank traders who have their, have their books and have their marks and check marks and have a very kind of objective trading habits. They're retailers. Some are up and some are down. And so psychology and market sentiment plays a huge role. And that's much more difficult to understand. But there was a big impact of this 7-8%, despite the leverage is small of the US, because the US completely went out of Chinese stocks. And we can see a second effect, which is also very interesting, another decoupling effect, that the Chinese equity decoupled from the global equity market. In history, and this is the close to the R square. R square is the correlation factor, as you know, is between the global equity market is roughly in the range of 0.7, 0.8, so highly correlated. That was until beginning mid-2020, when the US market went up, the European market went up just a little less. When it went down, the European market went down just a little more. The Chinese market followed. But in this, through COVID, and the secondary and tertiary effect of COVID should be understood, through COVID, these markets decoupled. And today you have an R square that's more in the range of 0.1, 0.2. This is no correlation. And you see in the past, Chinese market now is going up, 50% up again, stock market, and the US market collapsed. A European market collapsed, which is very interesting for investors. But I want to talk about China. I'm not investing there. Some people in the room know much more about investing than me. But if you have an asset allocation in your portfolio and you say, I want to devote a certain part to equity, you could have bought a world ETF in the past, and then you are very well related to the stock market. This time, at least last 2 years, is over. You have to have a Chinese bucket and an international bucket, which is a great opportunity, by the way, for investors, because they have two options to invest in. Market is going up. You can shift a bit more to China, and then the US market's going up. So you have a little bit more degrees of freedom. Coming back from moving away from the stock market, and happy to talk more about stock market if you have questions later, because we have this Chinese stock. Talking a little bit more about China. There's not one China. And there are many aspects how you can sort of separate and segment China. But the one thing that is helpful to understand in the restructuring and the building side, there is a traditional China, which is defined by state-owned enterprise, by banks, by fashion goods, by steel, by coal, which can be described by heavy excess overcapacity, very poor productivity, but massive employment. And this is important aside because it helps the supply side. This is from China Post to China Oil. It's a bit the stabilization of the country and also the employment. Never invest in those companies. You will never earn money, but it's important for the country. The right side is the new China, all the disruptive technology, all the digital technologies are on the right side. They're driving innovation, they're driving the future, and they're driving kind of the leadership, Chinese leadership through technologies. I said never invest in the left side. Yes.
The wealth, how is it spread around China? Is it concentrated in a certain area of China, especially with your last slide? How does it look like right now? Can you introduce yourself?
Yes. Yes, Catherine, we're supposed to have it. Yeah, we will meet. Catherine, there a couple of aspects. First, today, the wealth, if you look at the card, is allocated in the Shenzhen area and then the coastal area, right? But that is still the traditional view. I remember I was involved in a project for the government on the I think it was the today are the 14, maybe the 12th five-year plan, where the government says, how should we grow in China? You as a country, you have many growth models. You could grow like France, where you have one major city like Paris and a few Toulouse or smaller ones, but in principle, sort of one. You can grow like Germany, where you have different hubs, like the US. And we said it's very difficult. The only way to come to a conclusion, to make an economic model, how much does it cost to grow a society from place number 8 at that time to number 1? And there's so much money that you better go away that you can financially afford it. We came out, and that's indeed was implemented, that we created clusters. And we created 12 clusters in China. And one cluster, for example, is Shanghai as a center, with Nanjing, sort of major cities, all of them multiple million people, inhabitants. So each cluster has the size of between 40 and 120 million. And each cluster gets a mission. The one is the banking center, the one is political center, one is industrial, the one is auto car, the one is, high-tech center. And each center now is supposed to grow in its own way. And the clusters were so effective that, for example, if you look in the old structure where you had no cluster and said, how are people sort of getting informations on products? You could say there were the big cities, they were already using the internet and television, and there was small city, more billboards, etc. And once you turned it around and the cluster were introduced, the way people were living were alike within clusters, but very different from one cluster to the other. So the whole China shifted from very big, mid-sized, smaller city structuring segmentation to cluster A, to cluster 22, which resulted in a different GDP growth rates per region, because one of the reasons to do the study also was to get away from the coastal and the Shenzhen area and have more even distribution, because you give clusters a mission, but also the whole sort of sales organization in China needed to change, because you needed to understand the cluster much better. This is an interesting side. Don't invest in the left side of China. Here you say the cumulative return, profit return of state-owned enterprise and private companies in the MSCI China. So this was a difficult analysis to do, and it's state-owned enterprise and not SEO. We had this discussion where I mixed it up. And here you see state-owned enterprise have never earned money in their life. So not a good, trust me, it's not a good investment over time. Have not earned money, but they are important for the country. They assure the supply side, they assure the employment rate. And the private companies really have taken off. And it started with the private companies roughly in the year 2016. And I was scratching, why was it 16? And that was a time when the first listed but privately led companies like Tencent really got traction. That was the first time where Tencent got visible and the stock market realized that's a company we should invest in. And with these companies like Haier or Tencent leading and Alibaba came a bit later, then there was a big divergence between kind of the left side and the right side in economic terms. And what happened then to the right side, that China embarked in all the disruptions. And here you see these from brick and mortar retail to e-commerce. I mean, China e-commerce is bigger than, I think, the largest 10 countries, e-commerce in the largest 10 countries in the world. Alibaba, JD, Meituan, you can make the list long. Traditional banking into fintech. So the A&T listing was, I think, November 2020, when it was stopped, was basically the kind of a highlight in the fintech development. WeChat, C-Money. Gas, diesel technology, electric and hydrogen energy, traditional healthcare, digital health, work in the office, work from home, traditional media, short video streaming, 3G to 5G, and it's gone single app to super app. Now Alibaba announced that Apple announced that they want to build, I think, the super app now, which is a great idea. China did this already 7, 8 years ago. But it's good to do it, but will increase the dependence on Apple even further. So I don't know if it's a good idea. So why? The question is, why did China embark so heavily in this disruptive technology? And there is one convincing reason for it. Take the car industry. As a German, I know the car industry, right? Because there are so many cars. And the Germans are really not good in many things anymore, but they were really good in the diesel and combustion diesel industry. And the Chinese companies really tried hard to compete, but eventually they decided we cannot compete. There's so much engineering time, so much millions of engineering hours going, and we cannot compete. But they wanted to, and they said, why don't we change the playground? You know, we move from there to there, and we change the rules of the game and say the diesel and combustion is old technology. We don't want. We go into the next generation of technology with the effect that they had nobody to compete with, and they had time to develop. And there was such a smart move that they, by just changing the name of the game and somehow managing that the world somehow followed, like in ultra high, in the voltage energy generation distribution system. The low voltage system was crap in China. You have constant energy breakdown. Said, okay, let's go straight into high voltage. And the world now is running after them because we are stuck with these billions of investment of medium voltage or low speed trains or a 3G, 4G, and fighting whether we take the Huawei or whatever system. And China says, we're doing investment once, but we leapfrog all other technologies and leapfrog in the next generation of technologies where we barely have any competition. Very smart way to move, economically often the only way that could go. So those are, I don't know, this chart is a bit on the wrong place, but still those were the 4 revolutions: steam engine, electricity, digitalization, and AI. And you see how the world shifts from Europe to the US and from the US to US and China. And it's a real good question. What should we do in Europe as we now missing 2 industrial revolutions? Well, this chart should belong a little bit earlier. Doesn't matter. So what do we expect in China in the future? First of all, there are some technologies that were announced a little prematurely, but announced as the technology of the future, where China announced at the World Economic Forum. Was a mistake because the world became jealous and started to oppose China. Said those are the areas where we will want to become the global leaders. These are more traditional industries on the left side and more techie industries on the right side. But it's interesting to see that a country says those are the industries where we will become the global leaders. Next chart. But it's much more. And if you have a brief look at the 14-year plan in China, you have a couple of very interesting elements. First of all, you have the internal circulation and the international circulation. Both is very well pronounced in the 14-year plan. The internal calculation says we don't need foreigners. Let me say it blunt. In China, we are self-contained. We don't need foreigners. We steal the word made in Germany to make it made in China. And we are the tech and supply owner in the country. The international circulation is basically says, yes, but we will be the most powerful economy. They say in the 5-year plan 2049. Why do they say 2049? It's a ridiculous number. They will achieve it 2028, but they said it's 100-year Republic of China, right? And that's such an important date in history in the future, 2049, 100-year Volksrepublik China, Federal Republic of China. that they put many of the targets into this year, knowing that they will achieve this 10, 15, 20 years earlier. So world most powerful economy, they will, this is one of the, but and then the question is how they achieve it. And there are two stages to get there. The first stage is consumption. You know, China's GDP per capita is significantly lower that's of the US, but they have 4 times more people. So if you make the math, just a bit more consumption by 4 times more people will explode them already to the number 1. So China doesn't need the foreign other countries to become the largest economy in the world because of the number of people. But then I say, what are we doing next when we are, because then our people are consuming enough. We're independent technologies. We need expansion. And that's where I have all these wonderful things like RCEP or the Silk Road, which is a long-term strategy of land grabbing. Let's call it this way. They are forming economic partnerships. They get free trade zones. They give major loans to this part of the world that are barely can be paid back. And they bring this country in a super dependence to China, where they have huge tax privileges, and they're thinking just 20 years ahead. So they have 2 phases. Yes, they have the consumption phase to become the number 1 in the world, Chinese consumption, and then they have land grabbing where they expand their land territory. Yes.
Yes, so my name is Alex. I'm a teacher at Harbour.Space. I'd like to ask what's your perspective on China investments in Africa nowadays, like in Nigeria, elsewhere? So is it more for resources, or is it also part of this global expansion?
It's both. It's resources, but it's also expansion. I mean, you look at the macroeconomics and you see the growth in Africa, right? The growth in population of Africa now of Charles is outraging, and Africa is booming. Therefore, I say if you think 40 years ahead, Africa will play a different role in the world, given the population, depending on the weather, whatever happens. But let's put this aside. There is a part of land grabbing. I mean, I was in Namibia. If there is a piece land sold in Namibia bigger than 10,000 hectares, the likelihood that's bought by Chinese is very, very high, right? If you have any raw material, major raw material areas to sell, the Chinese are always shouting here. If you have a harbor or an airport to sell, or just any distribution system, it's both. It's raw material plus it's land grabbing. And it's Africa, it's South America, it's part of East of Europe, it's part of Central Europe, it's major parts in Asia. Not all parts. Asia will be very interesting. So Vietnam against and Thailand pro, so will be a different interesting thing. Within these 2 circles, you have the 3S, and this is not that known like the 2 circles. That's why I want to put it up. There is a stability S, and the stability has people, systems, and business. On the people side, and that's we will have to deal with a lot in the future, it says harmonious society and 3 mountains and minimum wage. The 3 mountains is education, healthcare, and pension. Those are the 3 big cash blocks, saving blocks. You know, if you have children, you need to pay education. Education, the Chinese people pay a fortune for education because this one-child policy, my child should be in a better position than me. The Beijing family easily paid in the past $30,000 a year for one-child education, right? 30,000. That's why we had this blockage of economics in the educational sector. I don't know if you followed this. And the government says these are the 3 major spending blocks: education, healthcare, and pension. They call it 3 mountains because for family it's like a mountain. And the saving rate is so high. Why? Because the family need to spend money for these 3 blocks. So they say if the government jumps in and helps the family to finance these 3 things, the family free up money to spend. that increase the spending expenditures, and that will drive GDP growth, and that will help it to become the largest nation in the world. So that's a very simple, straightforward reason for the minimum wages that people are starting to. Money is so important. We said two values. Money is one value, to earn money. But so things are easy. If you understand the fundamentals, things fall in place. Harmonious society means middle class growth, cutting off the Ferraris in the streets, and cutting off this sort of unequal wealth generation through real estate, driven by some of the political opponents, especially the Shanghai opponents. Xi Jinping is a Beijing guy, and Beijing and Shanghai is a difficult situation. He is making clear there's no systemic risk in China. He says China will grow. Also for investors, don't worry. It's just that now they're doing a lot of sort of stock market incentives that it goes back. There's no systemic. If it's written in the 5-year plan execution paper, no systemic risk. That's an important piece. Business, anti-monopolic structures. What they basically want, they don't want monopolies, because the monopoly take the power out of the hand of the government, and they don't want to have the accumulation of data in few companies. To be open, guys, I understand this a little bit. If I look at the data accumulation at a company like Apple or Google, let's say Google, that's a bit scary. It's hard to find where they can really pay tax. It's hard to find, do they belong to a country? No, not anymore. And they have more data than we can imagine. What's the power of, I mean, you guys, you're in the center of knowing what you can do with data. These, and the Chinese said, we don't want to have this massive data power in one few hands. The power should remain in the country. It's a different system. The Confucius system says the society is over the individual, and the society should own the data. And the society, that's then the political party, which is the trick they maneuver themselves in, is driven by the government. The government is driven by the president. So Confucius, we have Kant, we have the Kant philosophers that we have followed, where the individual is very high, maybe partially higher than the society, and the government and the industry is clearly below the society. Then you have stability. I'm getting a bit longish here. I'm rumbling a bit. I speed up a bit. We have sustainability. They want to have a balanced growth. They declared a three-child policy, but that's something the population doesn't really follow currently. And you have the security that is said data. That's basically we don't want to give us as any of the power of the government. Sorry, I'm rumbling a little. So these were all the regulations. It started with the A&T deferred or suspended IPO November 3 in 2020, where they said there is a fintech company that is huge, that has more rights and more power than any bank. We don't have regulations. We stop it until we have a full set of regulations for this unregulated but very important sector. And we will see the A&T will be going public very soon, because now they have a clear demonstration set to everybody that the power is the hand of the government and not in a single company. And they have formulated, and I think they will split up A&T in separate bucket. Then there came regulations on education, because people spend too much on bringing their kids to Tsinghua or Beijing University, 40,000, and it became a digital divide, an educational divide, which they didn't want to have. Then there came something like Didi, where these companies didn't pay the minimum wage, etc. So that was a clear sign the state wanted to get back more control on the company, but they also wanted to have regulations in place where it saw that other countries, mainly the US, developed in a way they didn't want to develop. Take real estate. She says real estate is a right of a human being. Having an apartment or place to live is a right of the human being and not a way to speculate. You know, I have a daughter. She is a pediatric surgeon. She's 35, my oldest daughter. She's living in Munich, and she earns, let's say, 60,000 euro a year. With 60,000 euros, she has 2 children. You cannot live in a Munich apartment. You cannot. And that is wrong. You know, we have to, living is a human right. And I agree. So I agree to most of those principles. I do not agree to the way to execute. But in principle, to say we have to have the basic things in life have to be affordable. That is right. And that has to be a bit regulated. When speculation goes over the board, where most of the apartments were basically empty, because when you move in, the price go down by 30%, and people invest, leave it empty, knowing that the price goes up every year by 20%. It's not a good speculative way. So all these trends resulted in a new setup of industry attractiveness. There were industries that got a regulatory tailwind, and those are really interesting industries. This is new energy vehicle, alternative energies, artificial intelligence, semiconductor, robotics, 5G, or biopharma. Those are the industry where China now says that's where we really put a stick in the ground, where we really invest. When they announced this was last year, we had within 6 months, 20,000 startups in semiconductors in China. 20,000 in 6 months, you know? That's the power of a central government that we don't know if we like it or not. But you know, there are two sides. There are many things we don't like. There are red lines for the governments we don't cross. But there are some elements that work. There are regulatory headwinds. Fintech, A&T suffered. Bitcoin, you will never have a privately owned Bitcoin in China, I guarantee you. Internet platforms, data management, private education was declared as a sector of non-profit sector, so tough. Real estate, as I talked about this. For investors, this is an important chart, I tell you. You know where to put your money on. Next chart. Next chart. So this is interesting. So a lot of headwind due to the regulations in China. And you see these are the number of regulations in the year 2021 and beginning of 2022. But the time this regulations now is almost done. But now they really want to stimulate the capital market again. And these are the number of stimuli, capital stimuli market for an investor. It's an attractive time, I think, now, because now it will turn around. You saw that the real economy performed well while the stock market was tanking. I think this will turn this year around. Yes. This you can read this. You have these are all the fiscal support of the government. M1, M2 money supply is going up. China is an interesting situation. Let's explain this a level higher. Inflation rate is traditionally between 0.5% and 2%. Today, 2.1%. So compared to the US, compared to Europe, nothing. So a lot of room to raise inflation rate. The interest rate is traditionally between 4.2 and 4.8%, but not higher. So a lot of room to reduce interest rate. And the money supply, so short-term money is M1 is the current money supply, and M2 is 3-6 month or so money supply, is very low. So the Chinese central bank has all the three major levers in hand: increase money supply. The first money is used for the industry, the second money then is used for the stock market. So lots of freedom money supply, freedom to increase inflation. 2% inflation is maybe still a bit lowish. No, you could make an argument that a little higher inflation helps, and room to decrease interest. That means they have all three major levers the central bank has in its hand, which we all have used up already in the rest of the world. So it will be an interesting time. You can use the interesting things, but let's move to the next. Let's not forget, because with all the problems, I met a gentleman yesterday evening, the day before yesterday, and said, I don't believe in the numbers of China. And then I said, yes, there were always people saying don't believe in the numbers, and some numbers are not correct. But look at the outcome, you know. And this is Shanghai. Actually, it's basically the view out of my office. It's almost there. It was not that high, and I was a bit further away, but it was close enough. There was in 1990 from the Puxi side to the Pudong side in Shanghai, the Huangpu in the middle of the river. And you see this was swampy farmland, lightly industrialized on the Pudong side, and you see this this harbor tower here. It's the same perspective. It's the most modern town. So my response to this gentleman who said, well, this is all fake numbers and fake news, and said, that's not a fake picture. There's a real picture of what happened, whether the numbers were wrong or right. This is the GDP growth from 2005 to today. The press is always full saying China's growth is not growing anymore. It's a simple mathematical problem. The percentage is going down because the base is going up, but the absolute number is pretty much is a straight line. There is barely any COVID effect visible or any other effects. Yes, this is the sort of visualization for people who live in pictures. That's what we have to expect, right? I mean, we see that 2028 is equal, and some people say that there will be a sizable difference between the two leading nations in the world. Halt, Svetlana is taking a photo. Now take a photo. There is another digital way to send you the picture, but next one. Yes, this is interesting too. We saw the development of the country, but the country, of course, is driven by the companies. These are the Fortune 500 companies, American companies and Chinese companies. In the year 2005, when I moved to China, we had 16 Chinese companies in the Fortune 500, and we had about 174 Americans. In no time, this picture changed. In 2020, 2 years ago, there were 12 more Chinese companies in the Fortune 500 than Americans. I mean, these are facts. These are, again, to our friend 2 days ago, don't trust the number, but these numbers I would roughly trust. This speed is just amazing, right? And there are companies in the Fortune 500 that I bet with you, many of you have not heard who these companies are, but this is the time, you know, I mentioned the time, 10 years from foundation to Fortune 500. And this will happen, this is my estimate, I have to admit, will happen to the capital markets. Look at 2018, of the world capital market, 46% were American companies, regardless where they are domiciled. So the American companies, so we're listed in whatever, in Switzerland, still counted as an American company. American companies, half of the world, American companies, 14% Chinese, 17 rest of the world, Europe 90%. So our estimate, and I used number McKinsey, Goldman, World Bank, IFW, et cetera, everything you can has good data. We used and scrambled it together, and you basically come out with the following. The US part will go down to 50%. The China will double. Rest of Asia will have basically the same percentage. Europe will become, let me say, irrelevant with 14% from 19 today to 14. But Asia is roughly 50% of the world's capital market. And at that time, China will have the largest capital market in the world. This will not happen before 2030. This is not 2028, but I still think this is. And if these numbers are not correct, of course, because how can the future by definition is uncertain, but the direction is correct. And we have to remind ourselves that we are living in an Asian century with China being the main driver behind it, and China has all the intention to become the number world. We can switch over this one. So what do we see, and I'm slowly coming to an end, what do we see in 2020? We see this strategic approach in China toward future industries, right? From electric vehicles to semiconductors. This will be a very, very important approach, not only in 2022, this will last for the next 2 or 3 years, where say we make hundreds of billions investment in those industry, and we want to have it at least at eyesight with the Americans, at least. Secondly, we expect a massive support in fiscal and restructuring policy, especially in monetary and fiscal policy, will change quite substantially. The regulation is done, and now the capital market will be restored. I would almost say restored and restructured, because they need foreign capital for their company. They don't want to have foreigners, but they need foreign capital. Therefore, need the capital market sort of observed and regulated through Hong Kong Stock or Stock Connects. The CO2 neutrality will come. It will peak in 2035, and I look at the weather. I hope it peaks a bit earlier. And the stock corrections are happening already. Look at Alibaba PE. This data old. PE has 18. Alibaba went up. Amazon had 66 when I wrote the chart. It's substantially down now. So the reality was faster than the half-life of this chart. I say half-life is important. Next chart. They're negative. You see the stock market of the different. This is also interesting. You see CSI are all China stock, and you see everything is starting to recover, but we had this massive downtrend. CSI all China. Then Hang Seng is Hong Kong. Hong Kong Tech. How do you see how this corrected? And Nasdaq Golden Dragon are the Chinese tech stocks in New York, and that is scary. I mean, look at this. They went down from index 100 to index, what is this, 30 or so, right? They were down 70%, the tech stocks in New York. The tech stocks in Hong Kong went down by 60+%. So the foreigners and tech was the main driver. Somebody asked the question, main driver. Next one. Whatever, we have a fund, we can go over this. Our conclusion. The first conclusion before you read this is, I expect the world falling into 2 hemispheres, an American hemisphere and a Chinese hemisphere. And it started with Huawei and the Americans. It will go across all technologies. We will see, and I'm betting that we have 2 competing technologies in the world for every single use, an American-driven and a Chinese-driven, and hopefully some Europeans. And the world has to somehow fall into buckets and has to somehow find the way in these 2 hemisphere world. And Asia will be a critical factor, because Asia is not Asia. Asia is Vietnam, which is close to America. Asia is Thailand, which is close to China. And then you have Taiwan. You know better than I how this difficult situation in Taiwan is. And then you have Malaysia and Indonesia, and every country somehow has to figure out how to deal in this new world order of these 2 hemispheres. And there will be a brutal economic fight between, and this will last the next 20 years, between the US and I don't think personally, don't think and don't hope there will be a war. I don't think so, but there will be an ongoing economic fight between these 2 regions. Beyond that, we see China has experienced unprecedented growth. They have still, despite all the difficulties and despite the government, which is, for me, does not take a very appreciative route, because the grip on the population and the grip on the companies is tightening so much. And it's a bit hard. I'm just reading the biography of President Xi. You can explain it a little bit. I mean, his father was put in jail under Mao, but still this guy is falling back so much into very old-fashioned sort of Chinese Maoist behavior, which scares me also a bit. I have to say this. And this is a factor. This is an unknown factor we have. Let's see how this country develops after the election now in autumn. Still, the written and very pronounced objective is to become the largest nation. They will become the largest capital market in the world. They develop a world reserve currency. This all happens because they need it if they want to go into these two hemispheres. Chinese government is strengthening the economic system again, but diverted from the American model. Since 1.5 years, Chinese were following the American model, the economic model of America. Why not if you go, and it started with the A&T, the stop of the A&T listing. Since then, they are trying to find and exploring a new own Chinese way, which is maybe the largest experience that we have seen in the world so far, right? 1.4 people are deciding to develop a new eco-political system. Has never been the case so far in the world. Let's see. The systematic risk, but due to regulation, is not there. We will experience a short-term volatility, especially until the election. He's panicking somehow around this election. I don't know why he will get elected, but there apparently within the government, there are lots of, the country of this size and this diversity to get an election through is also not that easy. So this is our outlook, especially the capital outlook, midterm, long-term is very positive. I think we have one more, or this is the last. No, this is the last chart now. We are in the year of the tiger, and the tiger symbolized courage, optimism, adventure, and the willingness to take risk. Thank you. Yes.
Can I ask questions?
Sorry? Hi, Ingo. I'm Ignacio. I am very keen on China. Actually, my daughter is studying Chinese. Everything looks really nice. I think China is on the way to become #1 economy, definitely. But what is your take on the chances of being derailed from that clear vision to become #1? You know, what are the biggest issues they face?
I mean, the list of issues they're facing is pages long, from aging society to Taiwan to minority discussions from the sort of all the different. So the income that needs to go up and up and up. So there is a super long risk of challenges. The government is very smart. Every government in the Standing Political Committee has gone through a long and very well planned career. We did a decoupling of the deconstructing of their career, and everybody has to fulfill 5 criteria to get into there. It needs to be abroad, needs to have a strategic role, has to be a strong political role, etc. We did this analysis 10 years ago, and we were 80% right and 20% not right because they're in jail, you know. But you can predict this is a strategic plan. So you have a super smart 80% of the government is Tsinghua alum. So you could say in the US, 80% of the government are Harvard, Stanford, MIT, or in Europe, 80% are Harbour.Space. So it's a super smart government. For me, the risk is, how will this country evolve where now President Xi, who tries to stay lifelong in his role, becomes a little bit like God, feels like God, and he really changes the interaction with people and companies. How do people react if you tighten and tighten and tighten the grip? Chinese people are forgiving because they say they know what they do, because you have Confucius, where society is over the individual. But how long can this go? Foreign companies are retreating from China, but they need China. I mean, 40% of Mercedes profit is coming from China. All the factual issues, you know, will be solved. But this is a mindset, a mental a psychological issue that I don't know where this is going. We with a Western perspective cannot imagine that people like to live in the world that we might anticipate coming up there.
So it's not about prices, so it's not real estate problem.
No, it's not about real estate. It's not about energy crisis, not about education, not about healthcare system. All these tangible issues will be solved. Also, I'm not worried at all about any of us. I've been worried. I can see that all these issues, but the change in the touch and feel of this country, that is. And there's a second thing that worries me a little bit, or that makes me a bit concerned. As money plays such an important role, and we have the wage increase of 12% over the last 25% or so, 25 years. People get used that they are much better off every year, substantially better off. There's a long way to go still, but it's not. It's a logarithmic curve, or it's an exponential, something that goes somehow to a limit where you end up more in the inflation rate increase. It cannot go forever. What are people doing if their number one or number two value, i.e. money, is not really coming in as they were used to it for the last 30, 40 years? Then they have to change this. And this is unsolved. Yeah.
I have two questions. I'll ask one, and if there's still time, I'll ask another. So as you mentioned, that at least on a superficial surface level, there seems to be a consent of the government for the Chinese government, mainly because they're able to provide financially for the people. But it's still a dictatorship. And what happens once this financial factor stops being so powerful? And inevitably, the dictatorship will have to become more and more brutal to hold power as the consent goes down. And already they're putting people in concentration camps. So it's a huge deal. What do you think will actually happen in Chinese society once this consent starts going down? And do you as an investor see a moral dilemma here? Is there anything that bothers you about investing in companies that might be participating in this crackdown, or being just in a system that is so oppressive?
Yeah, this were a bit more than two questions, but very relevant question. Yeah, your first 2 points were exactly what I'm also I can lay out the issue, but I don't have the final answer. What is a population that is Confucius educated, society over individual, that trusts the society more than any other individual? I give you an example. What's happening in China? You go. Sorry, I'm diverting, but to make it more. You go on an autobahn, and behind you is an emergency car with a blue light, and for the hospital, and and somebody apparently has a severe problem. Nobody is moving his road. Nobody let him pass, because this is an individual, and the society is driving. Everybody wants to get home, and not only one individual. So he has to queue up, and the poor person might be dying in the car, and nobody argues. The society is, that's a real example, right? Society is over. So what is happening, and I cannot answer this question. What is happening to a society that is grown up with a completely different philosophy and mindset when this grip is tightening more and more? The international companies try to become independent. The Chinese companies will arrange because they want to survive. And what is happening to a country that is used, I'm repeating your question because these were exactly the key issues. What is happening to a country that is used to this increasing wealth? The second area, you asked about the moral problem. It's a difficult question. We answered it in the way that we say there are red lines that we don't cross. So we would not invest in anything that is beyond this red line. And that's a lot, right? We would not invest in military companies and companies that use childhood, that, that have a leadership team that is, I don't know, half in jail, et cetera, et cetera. we do invest in companies that are living in this Confucius way of living. Because that is something we do accept as a different philosophy, because we don't want to judge from our ivory tower over another system that is living in a different philosophical system. We accept that there are different systems of philosophy. We do not accept the breach of human rights where we define a red line, but we don't punish every single individual company or person for something that is done by the government. That would be same what I strongly argue with, let's say, Russia. I strongly argue with people to punish Russian people who have nothing to do with what the government or the military is doing. That's where I do a clear separation. That's how we deal with this. Yes.
Well, first of all, thank you so much for your amazing presentation. It was indeed very interesting. You have mentioned like several times in your presentation that China is going to be the greatest economy in the next like 7 years, 5 years, maybe less. I'm just thinking that in the past, it was pretty clear that the US would like not want to give up their leadership. And how do you think China would tackle the fact that I think like US are already printing more and more dollars that would try to somehow fight this competition? How do you think they're going to overcome that, given the circumstances that the US is such a big economy?
I think the train has left the station. There is no way to turn back. There is a great analysis of the, I think, Stanford or Harvard Institute of Governance. Some of you guys, where they analyzed the last 13 situations in the world where an empire is attacking economically the leading empire. You might have read this. There's a very famous US analysis of one of the leading universities. And in, I think, 16 cases, in 13 cases, there was war, right? The defender fought with the war against the attacker. There were 3 cases that ended in the economic war. I'm sure that's why I said we will have an ongoing economic war. What can the Americans do? Can they do? There are very few technologies where China is still dependent on America or on others. This is semiconductors, right? And this is Taiwan. This is TSMC in a nutshell. So what the Americans are now doing, they invest billions and billions and billions in semiconductor to build up their own semiconductor industry. What are the Chinese doing? They have billions and billions to invest in their own semiconductor industry. There are airplanes. It's a question of time that Chinese people have a similar airplane. There are few other industries, and those are the tailwind industry, where China now is pushing everything to become independent. I don't see a serious weapon that America has left to really stop. They can delay it a bit, but really stopping China is very difficult. I don't see a way. Yeah, the question is what happens to Taiwan? It's a very good question. I don't know. It's to conquer Taiwan from the Chinese mainland is very, very difficult. It's an island. Taiwan is weapon-wise very well set up. And China has 2 objectives: global leader and avoiding internal frictions. And with the war, you will put both in danger, to say the least. For President Xi wants to become stronger in the history books than Mao. So taking over Taiwan would be exactly the thing that put him in the books, in the Chinese books, at the #1 place. I have a weird hypothesis how this all ends up, but it's mine. So if you look at Taiwan, and it's not a nice theory I have, so admit and don't kill the idea messenger. Why is Taiwan interesting beyond the psychological thinking? Because all the Chinese left after Mao to Taiwan, the intelligence basically left to Taiwan and created then their own country after a while. Taiwan has economically it's not interesting, but it has technologies that China urgently needs, and the Americans too, semiconductor as a forefront. When now China builds up semiconductor expertise and the US are building semiconductor industries, what's left in terms of attractiveness of Taiwan? I could make a kind of, huh? The Taiwan Strait, yeah, and it's blocking a little bit military-wise. Taiwan is an interesting, from American perspective, yes, but that's basically what's left. Otherwise, it's an island like Hainan. You know, it sounds a bit funny because Hainan is a holiday island, but it's the military. It is indeed the military sort of blockage between China and the rest of the world. You're very right. It's a great point. But it's reduced. The economic element is out. And my hypothesis, or let me say hope, is that there will be an agreement in the long run between the US and China how to deal with Taiwan. And maybe there will be a Hong Kong solution. And that will be a 30, 40, 50-year solution that we say we do a non-disclosure agreement with this island, and that over time, seriously, from a world perspective, we want to have peace. And if you have such a friction in the world, you have to find a solution. And there are easier solutions finding in the long run. So if I could have a saying, I would say find a long-term amicable solution between the US and China, maybe a little bit over the heads of Taiwan, and create a Hong Kong solution that hopefully is better executed then, and that's so radically executed. But this is an extreme, and I have no idea if I'm the only person who thinks this way. Yes.
I wanted to build up on what you said regarding China and America. So from my perspective, this is, again, my hypothesis, is that America doesn't really need to do anything special. It's just stay on the course they've been staying for all this time because it's the longest working system. And with China, I see that a lot, unless this regime changes, which I don't know whether it will, but taking that into account that it doesn't for now, I don't really see how the innovation and the growth is gonna put China to such a strong position, because like we've seen this with the tightening of the grip for Jack Ma, who was I guess, the ideal entrepreneur for China, and he got kind of, well, let's call it regulated. Do you see maybe something like Chinese people realizing what's happening and flooding to America, which was a case for a lot of socialist countries in the past, where because of the free market economy attraction, they basically turned sides, let's call it. Do you see maybe this happening, and how would that impact Chinese growth?
I mean, it's currently you see an opposite trend, right? The ABC, the American-born Chinese, are trending back home, right? This is they have a difficult welcome because the mainland Chinese people sort of refuse a little bit the American-born Chinese. There are not so many people now really leaving the countries. They are. But this two-hemisphere world might make it even more difficult. If that would be a case and you have a intellectual drainage, if that would happen, that would be an issue. On the innovation side, the government clearly sees the innovation is coming out of the privately led companies. Alibaba, A&T is one of the main driver of innovation. Artificial intelligence happens at Alibaba and Tencent, and not at the government, not at the state-owned enterprise companies. They have no idea. They cannot even write it, what artificial intelligence is. So they are in this difficult situation that said, A, we want to regulate the right side of the V, but B, we need innovation. And therefore they say we have this 6 or 9 future industries, and they will leave much more freedom to those, put much more money in. It's interesting to see. I was in the board of the Tsinghua Tsinghua Innovation Lab, yeah, where you had the kind of all the startups, and 60% of the VC money is coming from the government in China, which is huge. You know, in America, how much is it? I mean, in Germany, it's you cannot count the decimals after the zero. That you know. 60%. The size the government is putting lots of money in on the innovation side, in the future, in the disruptive sides, though they don't want to give up control. This is always the answers for China are always difficult because it's neither black or white. It's always, you have always these two sides of the medal to really understand. But you're rightly pointing to the fact that as we said, it very much depends on how the president and how the government will really sort of steer the companies and the population. And what happens if they overdo the grip? Maybe they release it. My hope is they release it after the election. I'm not that sure, though. Yes.
Yeah, my name is Evgeny Kovalyshin. I'm teaching class on wealth tech here. Thank you very much for your presentation. It's very thought-provoking, and certain things were very interesting for me personally, because I thought that one of the key issues long-term over the centuries that China used to have was this imbalance between the development of the cities over the shore and the midline China. And as far as I understand, this cluster approach did the trick. The other major issue, again, that I heard from my Chinese friends talking about long-term development of China is the demographics and the aging of population. Back in the 70s, when they started their growth, they had like a triangle in terms of the demographic pyramid. Now it's more like a Russian doll or something. And that's one of the reasons, for example, why some of the Chinese friends of mine who were educated in Europe and in the States are returning back home, is to support their parents, because again, family is of paramount importance. But my key question here would be, as an investor in Chinese companies, aren't you afraid of them moving from this US type business model where shareholders' value is of paramount importance? So everything is devoted to the growth of share value and return to the shareholders, more towards German type of model, where it's stakeholders, society and other elements. Aren't you afraid of shareholders being sort of deprived of some of the value? But thank you so much.
Yeah, it's a good point. For that reason, we completely moved out to ADRs. So all New York listed Chinese companies are all ADRs. Different concept. They have a structure that is in Cayman Island. In Cayman Island, invest typically in WOFIs, foreign fully owned enterprise in China, and then they own the shares. That if you buy a stock, Chinese stock in New York, you don't buy anything. You buy some written rights of profit sharing, but you don't have voting rights, etc. So, by the way, 70% of Hong Kong stocks also have ADRs. This is also if you invest in Hong Kong, Chinese companies in Hong Kong, you're not really buying shares. You buy in 70% of the company's rights of profit sharing. All these regulations will result in a bit of a lowering growth and lowering profit. That means the net present value will go down. And therefore, you will have to have an inbuilt discount compared to the US valuations, but not a discount of factor 2 or 3, but let's say of 30% would be reasonable. But that's the discount factor you have to apply. will it, given that the economy will continue to grow to become the largest economy, will it, the fact that there are companies within 10 years coming from foundation to Fortune 500, where you see the stock price is going flat, and when the capital market sees that this company will become a China, Asian, or global leader, the stock price goes through the roof because you have this huge capital behind it. Will this not offer tremendous opportunity? Yes, I think so. But will it be more difficult to invest? I also think so.